One of Hollywood's recent breakout stars isn't some up-and-coming actor. Actually, he isn't even human. It's this little guy, Baby Yoda. Or that's what fans named the childlike alien from the hit Disney Plus show, The Mandalorian. Instantly memeable, the little green character helped make Disney's new show and its new streaming platform a smash hit. Since launching in November 2019, Disney Plus has surged to the upper echelon of the crowded streaming ranks, with 37 million subscribers in the US and over 86 million globally. Its success has marked a bright spot for Disney, a company that has lost a little bit of magic. In The Mandalorian, characters go to great lengths and take a few risks to keep Baby Yoda safe. And in many ways, Disney has made similar moves to help its nascent streaming platform thrive. Baby Yoda might have been a new character, but the universe he lives in wasn't new at all. Disney owns the Star Wars franchise. It's one of the many well-known brands the company packed into its Disney Plus streaming catalog. WSJ's Eric Schwartzel has been following Disney Plus's growth.
The Mandalorian has been the breakout hit of Disney Plus, and it's no surprise because it combines a known entity, the Star Wars universe, arguably the most successful franchise in Hollywood history, with a new storyline that you can only see and explore on Disney Plus.
Disney Plus offered 500 films and over 7,500 TV episodes at launch.
They had this stable of brands that they could already draw on. Plus, they had movies and characters that people wanted to watch again and again. So if Disney Plus became the exclusive home of the Iron Man movies and the Finding Nemo movies, that was already a built-in advantage. Then they were able to use those brands and characters to make sequels and reboots that become events on the service and give them this perfect bridge of new material using old or familiar characters.
This helped garner 10 million subscribers on its first day, with The Mandalorian driving buzz and acclaim. This overnight success couldn't have come at a better time for Disney. Even before the pandemic, investors had questioned Disney's long-term growth potential. Disney Plus was viewed as a critical venture to help the company capitalize on digital entertainment. But with so many streaming options crowding the space, the platform wasn't a surefire bet. Here's former Disney CEO and current executive chairman Bob Iger speaking to WSJ in 2019.
This is a dramatic shift in the way people consume entertainment and information. Your business is going through the same thing.
Right.
And it requires an immediate shift in strategy in order to stay healthy, in order to thrive.
Investors were looking at companies like Netflix and seeing those as companies where there was a lot of growth. Whereas Disney, despite ruling the box office and having theme parks that had to turn people away, they were so popular, had a major issue with cord cutting.
This cord cutting was felt most by Disney-owned cable network ESPN. And as cable subscriptions fell, Disney's stock price became more volatile.
Wall Street wanted to see a strategy for growth and a strategy for the future. And that is what led executives to conceive of Disney Plus and launch it in 2019.
So when the pandemic hit, with Disney shuttering theme parks and no theaters open to screen movies, its share price took a dive. With people staying home, revenue shrunk, and Disney Plus quickly became more important to the company's bottom line.
Without those traditional revenue streams, Disney Plus was leaned on even harder as a place to look to for investors as something that might keep the company afloat. And frankly, it has worked incredibly well.
So well that Disney announced a massive restructuring of the company, positioning streaming as a top priority.
Essentially, what we want to do is separate out the folks who make our wonderful content based on tremendous franchises from the decision-making in terms of where the prioritization is in terms of how it gets commercialized into the marketplace.
This included redirecting high-profile releases like Hamilton and Mulan from theaters onto its platform.
Alexander Hamilton. My name is Alexander Hamilton.
They reorganized the company in a way such that there is now an almost agnosticism about where a movie or TV show will run. It is more about creating that show, building that programming, and then deciding, would this be best in a theater? Would this be best on a TV network? Would this be best on Disney Plus? And increasingly, Disney Plus is the preferred option.
This strategy seems to have energized Wall Street. Despite posting 2 consecutive quarters of losses in 2020, including losing over $2 billion in its park division, Disney's stock price has rebounded. In November, it announced plans to lay off 32,000 employees by March 2021, mostly in its parks division. It also said it would be suspending its January dividend to invest more heavily in streaming. On top of this, Disney Plus set a projection of 260 million subscribers by 2024. But experts question how realistic this forecast actually is. A Disney spokesperson said in a statement that with a rapidly expanding pipeline of exceptional original programming in the works, the company believes it will significantly expand its global subscriber base.
What they're trying to do now is figure out what they can do in terms of pricing and also what they can do in terms of international growth, because that is where a lot of the new subscribers are going to be coming from. There are some challenges ahead. For one, it remains an incredibly competitive landscape, and no one really knows yet how many streaming services the average consumer might want to subscribe to. And the other question becomes, what is temporary and what is permanent when it comes to the way viewing habits have changed during the pandemic?
Questions like these will test whether Disney can navigate a post-coronavirus business landscape, and if Disney Plus can not only be the most magical, but also the most streamable place on Earth.